All righty. So our product training today again is going to be Mutual of Omaha. And I was just mentioning that when I first started, I started with only Mutual of Omaha. And I got to tell you, they have a great product lineup. You know, obviously we're working the final expense market, but we're not limited to final expense. And today we're going to go through all the different types of products that they have live. I'd like to do a series, so just depending on how much time we have, we may have to continue the live series next week. If we're able to get through it today, then we'll continue the other products that Mutual offers. But let's go ahead and talk about the first product, and that is, oh, I'm sorry, getting ahead of myself. Let's talk about this. If you don't already have this, if you're a new agent, you need to pull out your cell phone, go to the App Store, and download the Mutual of Omaha Quotes for Sales Professionals. And you can quote rates right off your phone. Without having to use a paper sheet or a tablet or an iPad or maybe a PC or something like that, right off your phone. So if you have an Android device, you're going to go to the Google Play Store and you're just going to type in Mutual of Omaha, and it's going to come up and it'll give you a couple of options, and you want the one that says Quotes for Sales Professionals. If you have an Apple device, iOS, you're just going to go to the App Store. Same thing, Mutual of Omaha, Quotes for Sales Professionals. And once you download this, you can actually customize your list. You can set it up for which one you want to show first. If you hit the menu, if you look at the left picture there and you hit the menu on the top right, you can set up what state you're in, and you can set up some other stuff so that it always pulls up the same thing without you having to pre-populate a lot of stuff. So let's talk about Living Promise. As you can see there, there's a ton of products that you're able to offer. On the right, I just want to mention this real quick, but if you take a look on the Living Promise, it says premium and it's highlighted, and then the white says face amount. You can either select premium, meaning it's going to calculate what your premium is going to be based on the face amount. But if someone tells you, I can afford X amount of dollars, let's say I can afford $50 a month as an example, and you wanted to calculate how much insurance they can buy for that, then you click the right side and you hit face amount, and it'll calculate the face amount for you. So guys, you can calculate that either way. All right, so let's go ahead and move on. So now let's get to the Living Promise. This is our bread and butter right here. If you don't know Living Promise, you really need to get familiar with it. This is for ages 45 to 85. Again, 45 to 85. Very liberal underwriting, a very simple application. They have some health questions. You got really, 2 half pages of questions. On page 1, it's a knockout question. If the answer yes to any of the questions on page 1, they are not eligible for Living Promise. You would need to go with a different product or different carrier. If they answer no to everything on page 1, you proceed to page 2. On page 2, if they answer yes to one or more, they can answer yes to everything on page 2, or maybe just one on page 2. Then they are eligible for the graded benefit, which I'm going to cover here in a second. But I just want to talk about some highlights. So first off, with the Living Promise whole life insurance, you can go with face mounts as low as $2,000 and the maximum of $40,000. And I have sold the minimum and I've sold the maximum and plenty of stuff in the middle. And so just depending on what your client wants, maybe they just want a direct cremation, they're on a limited budget, quote them 2,000. They want, some additional benefits and coverage. They want to leave money for the family. They want to have a fancy funeral. You can quote all the way up to 40,000. Now, I want to talk about a couple of things that are included with the Living Promise whole life insurance. And the first one is that it includes an accelerated death benefit for a terminal illness. And I really like to share this with people because most people don't realize that. And if you think about it, this is a beautiful benefit, because let's say someone is healthy now and years go by and they're diagnosed with some sort of terminal illness. And it doesn't have to mean that they got cancer. It could be, that their health just really deteriorated, and, they don't have much time left. Well, rather than waiting until they pass away, they can go ahead and start the claim process now that they've been diagnosed, and they can go ahead and submit the claim. Mutual of Omaha will write the check to the policy owner. They can get that check while they're still living and go pay for the funeral, make all the arrangements ahead of time. Whatever money's left over, they can, give that to their family. This is huge, and it's no additional cost. It's built into every policy. The second thing that they can get is a nursing home confinement, which also accelerates the death benefit rider. Particularly for the lower income people, they are very familiar with going into a nursing home based on Medicaid benefits, right? And so if they're on Medicaid, or if they have to go on Medicaid and they go into a facility, well, Medicaid doesn't allow them, to have that policy. So they can go ahead and accelerate that death benefit, file the claim, and go ahead and take care of the funeral, and again, make those arrangements up front, and taking that burden off their family. Now, I want to talk about the two levels of coverage that they have. They offer a level benefit and a graded benefit. Level means that the coverage is from day one. So as soon as you sign them up, if they were to pass away unexpectedly, within, a day, they're covered. It's going to pay the full death benefit. Graded benefit basically means that the death benefit due to natural causes during the first 2 years, the beneficiary will receive all premiums paid plus 10%. After 2 years, the full benefit is paid for the death due to any cause. Now, full death benefits will be paid in all years if the death is the result of an accidental death, right? So essentially, maybe they have some sort of illness that normally would disqualify them from any type of coverage, but they can go ahead and get signed up now. And then after 2 years, the full death benefit's in force. But if they died by accidental death, then it's going to pay it. So I'll give you a real live example of this. Let's say you wrote a $10,000 policy, and I've done this, numerous times, but let's say, for example, they have, I don't know, let's just say they have COPD, or maybe they have had a heart attack within, the last couple of years, and normally they would be disqualified. Well, I ask the customer, how are you doing right now with your health? Oh, they usually say, oh, I'm so much better, things are getting better. Great. Well, we can go ahead and get you going with this policy. Do you see yourself dying by natural causes in the next 24 months? And they always say, no, not to a natural cause. And I'll say, this policy is perfect for you then. See, because if you were in an auto accident, or, you're in a drive-by shooting or something crazy, some kind of accidental death, the policy is going to pay from day one. It's only if you die by natural causes in the first 24 months that it's going to refund all your premiums paid plus 10%. But once you meet the 24 months, if you were to pass away by natural causes, then it's going to pay the full death benefit. And so they usually say, oh, yeah, that sounds good. And then that's how you sign it up. So you got to sell it on a positive note, not a negative note. Let me see here. I'm trying to think of any additional things I can say. Well, there is an optional rider, so I will mention that. You can add the accidental death rider, which doubles the death benefit. So if their natural death benefit is $10,000, you add the rider, they died by accidental death, it's going to pay $20,000. One thing I really like about Mutual of Omaha's accidental death policy is there is no age limit. So, I mean, they could be literally age, 80 or something like that, and they'll still be able to take advantage of the accidental death. One thing I will point out, depending on what state you're in, the accidental death rider may not be included. I know, for example, California's does not allow the accidental death. So that varies by state. So Joe, before I move on to the next product, is there anything you want to say about Living Promise? All
No,
right,
no, man. Awesome.
great. So let's move on. So let's talk about this. Let's talk about Term Life Express, okay? Sometimes you meet people and you go out on a final expense lead, and I don't know, let's say they're in their 60s as an example, and maybe they have a higher need for a higher death benefit. Maybe they still have a mortgage. Maybe they have a special needs dependent in the home, and they want to make sure that when they pass on, they're not only taking care of their funeral arrangements, but they're actually leaving money to help them with the financial, for these other folks, or maybe to help, cover the mortgage and stuff like that. And so with Term Life Express, this really, solves the problem or fits the solution. Term Life Express, by the way, express, that means that there's no physical paramedic done. There's no blood, no urine. This is all based on what we call express issue, which means that the insurance company is going to ask the health questions on the application. They're going to look at the Medical Information Bureau and their prescription history. And based on that, they're going to make a decision. And these decisions are normally made within, 2 to 3 business days. So it's a very fast process. Let me just run through some particulars here. So you can do 10, 15, 20, or 30-year terms. You can, based on their age, like for example, let me see here. A 30-year term is only available up to age 50, but a 20-year term is still available up to age 60, okay? And then a 15-year term is available up to age 70, all right? You have 2 rate classes. You're either tobacco or non-tobacco, all right? Simplified issue. I want to talk about some riders. Let's first talk about the ones that are included. So in addition to the accelerated death benefit rider for terminal illness and nursing home, this also gives you a chronic illness rider, right? And so basically what that means is that down the road, if they're unable to perform 2 of 6 of the activities of daily livings, those ADLs, for 90 consecutive days, then they are able to go ahead and accelerate their death benefit, and get that while, not only they're still alive, but they're not even considered terminal. So just based on a chronic illness. And then another bonus is the critical illness. And so that provides accelerated death benefit if they're ever diagnosed with ALS, a kidney failure, life-threatening cancer. That doesn't mean that they're terminal, but they got a life-threatening cancer, major organ failure. They had a heart attack, stroke. They're diagnosed with dementia, including Alzheimer's. If they had any major burns, if they're diagnosed with AIDS, or aortic aneurysm surgery. So, I mean, sometimes people need that benefit to help cover those medical costs. And so this is built into every policy. This is really designed for those younger folks too. I mean, if you think about somebody that's young, they have a family, maybe they're even single, but this is protection not only if they pass away, but if they're still living and something medically comes up, they're getting this extra benefit. So now they're getting living benefits. There's a lot of optional riders. I'm gonna not talk about everything, but I want to talk about the ones that I really like. Okay, so the first one that I love is the return of premium rider. We affectionately call it ROP. So ROP is available up to the age of 50. And I love ROP. And when I'm quoting it, I quote with ROP and without ROP, and I give them the option, right? They almost always choose ROP. So what is return of premium? What does that do for the client? So what that means is, let's say, for example, you had somebody that was age, I don't know, let's say 35, right? And you do a 30-year ROP. Well, it covers them up to age 65, 30 years. But if they're still alive, which they should be, right? In good health, they're still living, then Mutual of Omaha refunds 100% of all the premiums paid into the policy. So you can put a dollar amount on it. I don't know, let's just call it 25,000 as an example. They can either take the 25,000 cash, or this is how I position it. I run an illustration and I offer them the paid up edition or paid up life insurance. So the way the paid up works is at age 65, that 25,000 is going towards a paid up insurance policy that covers them to age 99. Okay. And they don't have to make any more premiums. And in many cases, it is almost the same amount that they were covered initially. So if, let's say, for example, it was a $50,000 face, it might be 50, it might be more than 50, it might be 55, it might be less than 50, it might be 45. But it's in the general area. A lot of that has to do based on their age. It has to do based on the riders that they select. It has to do based on the term. So sometimes you go with the 20-year ROP, they have a higher death benefit than they originally had during those first 20 years versus the 30-year. So you just got to play with that. So that is a beautiful feature, and it's not that much more money. So I mean, if they pay just a little bit more, the ROP really makes sense. You can position that, think about that, you can position that kind of like selling a permanent policy, because they're covered for that 20 or 30-year term, but then if they take the paid up edition, now they're covered up to age 99. So I mean, it's a beautiful thing. Another rider that we often sell with that is the accidental death benefit rider. You can add that in. One rider that comes free, it's included, is the common carrier death benefit. So if they were to die on an airplane, or let's say a bus or a train, any common carrier that you actually pay for a fare, then it doubles the death benefit, right? So I like to tell people, I add the accidental death rider, and I tell them about the common carrier death benefit rider, and I like to tell people they're triple covered, right? They're covered for this base amount for a natural death. They're covered for double that if it's an accidental death. And if they died like in an airplane or on a train, then it's triple the death benefit. So they're triple covered, right? Uh, some of the other riders that I like are the disability income rider. So again, if you're going with somebody that's younger, you can add the income rider that will, replace their income up to $3,000 a month, and you can select up to I believe it's 60% of their gross income, and so that's a cool rider. You can do the dependent rider. So with Living Promise, going back to whole life, there's no way to add a rider to cover the kids, right? But on the Term Life Express, you can add children as a rider, okay? And then these policies are renewable. So even though, let's say you have somebody that's 35 and they take a 30-year, they can still renew it up to age 100 without evidence of insurability. So it's still renewable. And they can convert it too. So they have a Term Life Express. Down the road, they can convert that policy to a permanent policy, as long as they do it before the term expires or before their 70th birthday. Okay. Let me see here. think that's pretty much what I want to talk about on Term Life Express.
Hey, Jimmy, can I add something real quick?
Sure.
Okay, just on the conversion part, guys, they can convert it to any of the permanent policies that Mutual offers. So it could either be Living Promise, or they could convert it to a GUL Express. It just depends on their affordability. So let's say you sell someone, and by the way, I love this product, man. This was like Jimmy, when I first got introduced to insurance, Mutual was the first company I got contracted with, and I sold the heck out of Term Life Express. I mean, my favorite product. I own an ROP policy from them, so I'm a big fan of this product. But just going back to converting, as an example, let's say your client is 65 years old, as an example, but they're really looking for a little bit more. They couldn't afford, let's say, $25,000 of Living Promise, but they could afford $25,000 of Term Life Express, because Term Life Express, the beauty of it is you can go, the minimum base amount is $25,000. Okay, so let's say they got a decent premium, but then at age 70, as an example, they want to convert it, but to convert it to a GUL Express, the premiums are going to be too high. It gives them the option of being able to switch it down to a Living Promise, and now maybe they just need, let's say, enough to cover a burial. So you could switch it from GUL Express to the Living Promise. So you've got those two products that you can convert it to. The other thing too, just real quick, I don't know if you're going to talk about underwriting. One thing that will trick agents up sometimes, you'll notice, you're looking at the Term Life Express application and you're looking at the Living Promise application, they appear to be very similar. In fact, the questions on both the applications are almost identical. The difference is that on the Living Promise is that they put time frames in. Like, in the beginning, have you been diagnosed with a heart attack, stroke, cancer, all those in certain time frames, like 2 years. For cancer, it's 4 years. What you'll notice is that on Term Life Express is that they use the word ever. So have you ever been diagnosed with a heart attack? And what will throw agents off sometimes is they'll have, let's say, a 62-year-old client who appears to be in perfect health. They're hardly taking any medication. And in the back of your head, you're thinking, hey, you know what? This guy's looking for a bigger face amount. They may be a good candidate for Term Life Express. But then you find out, he had a heart attack, but it was like 20 years ago, so he should be okay. No, it's have they ever. So if they've ever had a major episode like heart attack, stroke, cancer, heart surgery, a stent, they're not going to qualify for Term Life Express. That's going to be a final expense client. I don't know if you want to add anything to that, but I'll turn it back over to you, Jimmy.
Thank you, Joe. Well, the one thing we're going to talk about next too is Guaranteed Universal Life Express. So let's go ahead and just go to that slide. But these two products, GULE, Guaranteed Universal Life Express, and Term Life Express, they use the same application. And on the front cover of the app, it says Simplified issue. Okay, so they both use the same underwriting criteria. They have almost everything is identical. There's a couple of variances on the writers, but the one thing I want to point out regarding underwriting is if they are on any kind of disability, right, that has nothing to do with a back or knee, they're not eligible, right? So that's the big thing, so if you have somebody that's on disability, they're not going to be eligible for either one of these products. So just kind of keep that in the back of your mind. You definitely want somebody that is a little bit more healthy. So let's go into Guaranteed Universal Life Express. Okay, so very comparable. This is a permanent policy, and I just kind of want to talk about what does the guaranteed mean? What do they mean by guaranteed? Well, it's guaranteed to a specific age. Okay, and you can guarantee it as little as age 80 and all the way up to age 120, and the policy will not lapse. So it's a no lapse guarantee depending on the age that you select. This is not an index product, it's a fixed interest rate product, and that's how they're able to set up the guarantee. This is really kind of cool, and I do some really, kind of sneaky, I call it sneaky stuff, but I mean like kind of strategic is probably a better word, stuff with this. So for example, this, by the way, is ages 18 to 65, right? Let's say you have that 65-year-old individual and they're wanting a 20-year term, okay? Well, on the Term Life Express, they're only able to get a 15-year term, okay? But with Guaranteed Universal Life Express, if they're 65, I can guarantee it to age 85, which is essentially a 20-year term, right? If they want a 25-year term, I can guarantee this to age 90, and essentially that's a 25-year term. So I don't know if you see that. I hope you're not getting confused. But with the Guaranteed Universal Life Express, it's considered a permanent policy that covers you up to age 120. But by lowering the guaranteed age, you lower the premium. And it does not have to be in increments of 5 years. You can do 81, 82, 83. I mean, you can do any year. You can go up to 89 or 93. It doesn't matter. But you're going to have to do the quote on a software. You're not going to be able to do that on the quoting app that I showed you. On the quoting app, it'll give you increments of 5 years. So you can quote 80, 85, 90, 95, 100, and so on. But you can go in between. So, I mean, I get real strategic on that. On this one right here, ages 18 to 65, you can go up to $99,999, and it's a simplified issue, right? If they're ages 18 to 50, you can go up to 300,000, simplified issue. And if they're 51 to 65, you can go between 100 and 250,000 on a simplified issue. And so those are some cool things. The other thing is that it has the guaranteed insurability rider. So what that means is, let's say for example you do guarantee it to age 85 and they're still living. Well, they can renew it and they can keep going. And of course they're going to have to pay the higher cost of premium, but it is considered a permanent policy with a guaranteed insurability without proof of evidence, right? It does have the accidental death benefit rider, the terminal illness, and the chronic illness built in at no additional cost. So where this differs from term life, it doesn't have the critical illness, it has the chronic. Want to talk about some kind of selling techniques here. So the first one is what they call a dial down feature, and that's what I was just talking about. So I recommend to quote this to age 120. The minimum death benefit is going to be 25,000, right? So if you're working with somebody on final expense and they do want, let's say they want 20 or 25 and they're in good health, you can position this. Even if it's 20, you can quote them a 20,000 living promise and then quote them a 25,000 GULE, and you'll probably get about the same premiums. In other words, they're getting more for about the same cost. Sometimes it's less. Sometimes they can get more for less, and that always makes sense. So this really helps you close the deal. But if you ask them about the longevity of their life in their family, if they don't say we have long life, if they say most people live to 85, 90, then kind of go over that a little bit, go 95 or 100, but you can dial down the age and bring the premium cost down, and it's more cost effective. And so this is how you can get really competitive in selling it, right? And then there's a short pay feature. So it's kind of neat. So a lot of people have heard of like 20 pays. Well, Mutual of Omaha calls it a short pay feature. And so what that means is, you know, let's say you had a client as an example that's age 40 and they don't want to pay on it the rest of their life. Let's say they only want to pay on it until they retire at age 65. So you can do a short pay to 65. It'll recalculate the premium for you. And basically, they have a paid up policy at age 65. So what's unique here is that it's not like a 20 pay. You put what age you want to pay up the policy at. And then based on how old they are, so it might be, 23 years, it might be 27 years, it might be 20 years, but I mean, so they call it a short pay feature. So you can do that on the software. Um, and then, just to kind of give you an example about what I was talking about a second ago, like shortening the lifespan. So a female age 63, we'll just go with non-tobacco. If she wanted a $25,000 policy, covering her to age 120, her premium would be $80.46 a month. But if she wanted to cover herself, let's say to age 98, right? She can get a $70.52 month premium. So she can save 10 bucks. And if you really need to bring that down, let's say you cover to age 88. Her premium goes from $80 to $57.09 a month. So depending, you can get real creative with this, and depending on your, estimated lifespan with your client, you can help either put more coverage in place or, bring the cost down depending on what they need to fit their budget and their needs. So it's very, very flexible. So that's the guaranteed Universal Life Express. So Joe, before I move on, did you want to add anything to that?
Well, I don't know if I want to add anything, but I got to tell you, I had no idea that GULE had a short pay. Is
Yes,
that
sir.
new, or has that always been around?
That's always been around.
Man, see, you learn. Thank God I get on these calls every week because you can learn something. Now, is that only available when you're quoting from your laptop, or can you do a short pay calculation from your phone?
You're not going to be able to do it from your phone. Now, you can download the software, but I use the web version of WinFlex
Okay.
Web. And
Okay.
so if you guys, and I was just going to talk about that, if you guys don't know about it, what you want to do is you want to call Mutual of Omaha sales support and request WinFlex Web, right? And then they have to approve you to get it. And then WinFlex, which is a third-party company that provides the software, will send you the credentials. And then all you do is just sign into it, and then you can do your illustrations online. I like the web version versus the desktop version because every time I pull the desktop up, I have to wait for all the updates, and it's tied up
Right.
for a
Yeah.
while.
Yeah.
You log into the web version, it's just so much smoother.
So if you have the web version, then you're able to do it from your phone?
I never tried it. I don't know if it would be advisable because there's so many different little like tabs
Okay.
and stuff to go.
So
I
at
don't
least
think.
you at least need a tablet then to do it,
Yeah, I
probably.
think you probably can do it from your phone. I just don't know how user friendly it's going to be
Okay.
on
All
your
right.
phone.
Very good. Well, that's amazing. I mean, that just opened my eyes up because that really increases, I think, the versatility of that product. I had no idea that they had a paid up version of that. The only other thing I'm going to make is just a little comment, and then change it back over to you. And it's just a little thing that some agents may not be aware of, and that is just be not cautious, but just aware that there are different commission schedules for different products. Okay. the one thing that I'll just mention is that whatever commission level you're at for Living Promise, that the Term Life Express, you take no reduction in commission. It's the same commission level. If you sell the GUL Express, what is it, Jimmy? Maybe 10 points. You take a little bit of a haircut in commission, I think. Do you know what the percentage is?
I don't remember offhand what it is.
Maybe 10 points, right? Something like that. So just as you get contracted, or if you need to know, you can log into the back end of the Mutual of Omaha website, and you can pull up your commission schedule. But I just wanted agents to be aware of the commission levels are not level across every single product that Mutual has. That was it. My only comment.
Good point. And I usually talk about that, but I'll just tell you this. When you're in front of a client and it's the difference between, really helping them and putting something in force and making a sell versus not making a sell, 10 or 15 points here and there really doesn't matter. I mean, I'm more about like, let's just close the deal. And so you just kind of keep that mindset when you're in front of clients, do what's best for them. And then, you'll be rewarded financially. That's what I have to say about that. But let's move on, because I don't want to run out of time. I think we can knock out the other two, and then we'll do the next series on some other products. But let's talk about Guaranteed Advantage, right? And if you look at the app, it says Guaranteed, and then AD is capitalized on the quoting app, right? And then it says Advantage, right? The AD stands for accidental death, right? So the reason why it's guaranteed is because there's no medical underwriting. It's a guaranteed issue, and it covers them for accidental death, right? What I love about this product is there's no exclusion to the industry that they work in. So if they're in a high risk industry, I mean, we're in Texas, right? So we got oil field workers out here. They can be in the oil, industry. They could be law enforcement. They can be a truck driver. It doesn't matter what industry they're in. There's no exclusions, right? The policy will pay a minimum of 50,000 accidental up to 500,000, $500,000. Now this is for ages 18 to 70, right? So again, there's no medical on this. It's a guaranteed issue. You sign them up, right? It does cover common carrier, doubles the death benefit. That's included at no additional cost. And it even has a thing called auto pedestrian benefit. So that means that if you were just a pedestrian and you got struck by a vehicle and that was the cause of your death, then it gives you a 25% increase in the death benefit, right? Those are included at no extra cost. So let's just talk about this real quick. So 50,000 to 500,000, right? What I really like about this policy is that you can quote it on your app. You can quote as an individual, right? So you can just do an individual, or you can do an individual plus spouse, right? So it'd be one policy, or you can do an individual plus the whole family. So that's really cool. Or you can do an individual plus children, right? So I guess you can have four categories: individual and spouse, individual and children, and individual and family. Guys, I remember Mike Slades, or Sladick, but we call him Slades, had told us a couple of years ago here in San Antonio that the number one producer for Mutual of Omaha in the nation only sells this policy. All he sells is accidental death. And he writes over $450,000 of annualized premium every year. And this is the only thing he writes. I would have to assume that guy is probably working the small business market and going and signing up groups of people, and there's nothing says that we can't do the same. You know, think about that. You can meet with people in the trucking industry. Maybe you meet with the a police department. This is in addition to what they already have through their employer, but it makes sense, and it's very affordable. I mean, and oftentimes when I sell this, the premiums are like $14, $15, sometimes $25 a month. I've been to places where I met with an individual, and they're really kind of more focused on the total death benefit, not so much, the natural death benefit. And I've added this on top of the living promise. I have one lady that comes to mind. I gave her a $10,000 death benefit for living promise and did a $50,000 accidental death benefit. And I told her if she were to die by accidental death, that gives her a total coverage of 60,000, and she loved it. Right? So, and then you write two policies. So this could be an add-on sell, or it could be a sell all by itself. One thing I want to mention about this is really important is that this is offered through the medical side of Mutual of Omaha. So it does require a health license, right? So, if you're a life only agent, you're not going to be able to sell this product because it's on the health side. The other thing too is that because it's on the health side, and it's a guaranteed issue, when you write the application on here, it does not give you any day option for their premium draft. There's only two options. It either drafts on the 1st or the 15th, and that's it. Okay. The other thing is that when you submit the application, it automatically drafts their initial premium right up front. Okay. So if you were to submit this today, they're going to be drafting that premium like probably tomorrow or the next day, because it's a guaranteed issue. They're not messing around. That policy is getting issued immediately. So just kind of know that if they're not ready to make that payment till the 5th or something like that, then just sit on it until the 4th. I don't know if you want to add anything to that, Joe.
No, I was just going to cover that if you didn't cover it, because I don't know, I'm going back probably 7, 8, 9 years ago. The first one I wrote, I did not know that they drafted immediately, and I got into big trouble, man. I sold the family a bunch of policies, and then I did this as an additional add-on, and I submitted the application. Their bank account got overdrawn because they took the money out right away, and they ended up canceling all of their policies because they were so pissed off at me, and I ended up writing a check to reimburse them for all the non-sufficient funds. So I learned my lesson. But so that's a great tip for you agents out there. If you are writing it and the client is not prepared to make a premium immediately, just hold the application in your office until the day before they want the first premium to be drafted. And that's it. It's a great, amazing product. Back to you.
Awesome. Thank you, Joe. So this is our last product. We'll knock it out for the Life series, and that is Children's Whole Life. Oh my God, I love this product. We sell a lot of these, and these are add-on sales. Anytime I'm in a home and I see grandkids in the house, oh my God, I'm pulling this out and I'm showing it to them. In fact, in our pre-sale folder, we usually keep, and I say usually because I know I do, I don't know about everybody else, but there's a form that.
Oh, hey, Jimmy, real quick. Yes. Can I add something?
Sure.
I was slightly distracted when I was driving, but did you on the guaranteed advantage, did you also mention, is that, I don't know if you covered it, but there's also a return of premium feature available on that product as well?
I did not, and thank you for saying that, Joe. You're absolutely right. So you can do the return of premium or the ROP also on the accidental death, similar to that Term Life Express. Good point. So moving on to Children's Whole Life, this is available for ages 14 or rather, I should say 14 days old up to age 17. And in the pre-sale folder, I was mentioning there's a form that we put in there that gives the like a quote chart pre-printed based on their age and their gender. And it's real easy to sell, but it's a whole life policy. It will cover the kid up to age 100. Um, and these are for face amounts starting with 5,000 up to $50,000. And what I'd like is that Mutual of Omaha gives them the opportunity to increase their coverage at these preset ages. So if they turn 25, 30, 35, and on their 40th birthday, 60 days prior to, they're going to get a letter offering them to increase their coverage. They can also request a coverage increase whenever they get married, if they ever have a birth or an adoption of a child, or if they purchase a home. So, as these children become adults, they can always increase that coverage. And this is without proof of insurability. And they can increase their coverage up to 5 times the original face amount, right? So, whatever that original face amount is, they can go up to 5 times. It does have a couple of optional riders like a waiver premium due to death. So what that means is that if the owner of the policy died, then the premiums would be waived. It's a one-time benefit. It's available for 24 months after the policy issues. So in other words, they can't die within the first 2 years. And then let me see here. There's no medical exams required. Rates are never going to increase. The death benefit's never going to decrease. It does build cash value over time. The other thing I like to say about this is that it's one application and you can put up to 8 kids on one app. So, and I've actually filled it all up. I've done 8 kids on one app. I've done 9 kids in one house before. So you put them all on there, they will all get separate policies. So that's really cool. I think there's only like 2 health questions, talks about birth defects and like a heart defect and a couple other little things. But for the most part, most children should be able to get this without any issue. I've never had anybody not qualify for it, but I think it's like a 2-pager. One page is for the basic information. The second page is really just like kind of for the payments. You set that up, and now you got some additional value in the home. A lot of times, if you go out on a policy delivery or maybe on an annual review, this is another thing you can revisit and get some extra premiums out of it. So guys, those are all the life products that I wanted to cover. Now, these products are all express issue that we talked about today. There are some other products that Mutual of Omaha offers on the life side that require full paramed exam. We're not going to be discussing those. These are just simplified issue, no exams needed. They typically issue within 2 to 3 business days. We're set up on express pay. That means that upon issue, they're processing your commission, and normally you're paid out the next business day. So, Joe, do you have anything else to add to this?
No, man, it was an amazing call. I learned a lot. You did a great job. Thanks as always. And God bless everybody, and have a great weekend.
All right. Well, there you go. Senior Solutions. There's another webinar down. You have a great selling weekend. God bless you. Safe travels, Joe.
All right, my man. Adios.